Welcome back, guys, to another video. And in this video, we're going to talk about all things regarding the Newcastle region, and not exactly the Newcastle region, but a location that's very close to Newcastle, and that is this Maitland region right here. There are a couple of suburbs that are of interest that are actively growing, that are showing great data metrics, and we're going to break it down for you guys because it could be a great opportunity for you. And like always, let's go straight into the data. Now, Maitland, New South Wales is about 40 minutes away from the Newcastle region. As everyone knows, Newcastle is a well-established regional hub. It is quite a big location that is about 2.5 hours from CBD, depending on the traffic levels. When you start to look at Maitland's data, you can see it's around 770K buy price, but you can find properties anywhere from around $650,000 up to about $850, and then it can get more and more expensive. Obviously, we don't buy at that price point, but you do really need a minimum budget of about $650 to $750 to purchase something in this area. You will secure something with yields around 4 to 4.5% is what to expect. And within this location, we can start to see that prices are rising with over 6% growth over the past 12 months. We can see rents have really started to rise with, again, 6%, which is very good compared to some locations in Victoria, for example. And when we look at the levels of stock and demand, we can see that stock levels are dropping down drastically, and that we can see demand is also starting to pick up, which obviously leads to capital growth, which are both great signs to see. But in this location, what suburbs should you be considering, at least at the start, until this location booms into its next cycle? One location is Rutherford, where the buy price is around $750 with a yield of close to 4% for the right deal. Again, you should get the right deal to purchase a property in this location. I generally look for a minimum of 4%. Some investors accept lower, but everyone has their own strategy. So make sure you purchase according to your investment brief. Over the past 12 months, we've had about 7% growth with about 3% in rent increases. So not as strong, but it's still pretty good. With an ERSAT score of 2 and a renter to owner occupier ratio of 34%, that is also pretty good, being a pretty owner occupier driven area. Affordability is around 40 years. Now, it's not the best. We like to see under 35 years, but overall, it's not too bad and something I'm willing to trade off if the data is good. And once again, stock levels are dropping with demand levels really starting to pick up over the last couple of months, and I expect this to get better and better in the foreseeable future. Vacancy rates are also sub 1.5%, which is another positive to see. The next location to consider is Beresfield as well, which is a little bit south of Thornton, a bit closer to Newcastle as well. You can see at the very edge. Now, Beresfield has a lower median price of around $700,000 with a yield of around 3.5%. Once again, you can find better properties with decent yields. 1 year growth is around 10%, with median rents only rising about 1.73%. So not very good compared to other suburbs within this location, but still acceptable if you're willing to trade it off. Affordability, again, is a little bit higher, around that 40 years, and an ERSAT score of 1, which is a little bit lower, and a still good 31 renter to owner occupier ratio. But here you can see that stock levels are very, very low, and demand is really picked up, and properties are selling within 16 days, which is extremely quickly, right? So you got to be pretty quick to secure an offer in this location. What's another location we're talking about is Aberglasslyn, right? This one is a little bit higher on the premium price point. You really need closer to $750 to secure something in this location, but it is growing in value at this point in time with around 6% over the last year and only, again, 1.73% in rental growth. But this is a much more better suburb from a socioeconomic perspective with the ERSAT score of 5 and a renter to owner occupier ratio of 32. And we can see affordability is a lot better. So people are on slightly higher incomes here with the affordability just over 35 years, so there's plenty of room for it to grow. Now, vacancy rate is a little bit high, around 2.53%, so I will be confirming with the property manager if finding a tenant is difficult. But from a capital growth perspective, stock levels are falling and demand is picking up. It's a location that should be on your watch list if you are considering the Maitland Newcastle region. And the last location I want to touch on is Woodbury, where the median buy price is around $610,000, so much lower, with yields of around 4 to 4.5%, which is much better, right? This is where investment opportunities could look really appealing for the right investor. Price growth is around 6% over the past year, and median rents is only 1% growth over the past 12 months as well. Much more lower socioeconomic, around 1 and 34 renter to owner occupier ratio. Affordability is quite high at 45 years, which is not great. We want to be sticking close to 35 years, but once again, stock levels are low and demand is high, which means we will see capital growth even though affordability is on the higher end, and vacancy is around 0.7%. 0.71%. So these 4 locations within the Maitland region are ones that are really starting to pick up some steam, that are actively growing, and locations around these suburbs, I wouldn't be surprised if it started to pick up later on into this year and well into 2026. And just before I go any further, guys, if you haven't already, join the private community. We have over 300 members in the community helping each other out just for $35 a month. It's an absolute no-brainer when you're buying a $500,000 to $1 million asset. There is so much resource available from the suburb watch list, advanced resources, spreadsheet, templates, community calls, deal vetting, and personalized mentorship as well, guys. There is so much value jam-packed in here. You'd be a fool not to even try it out for 1 month. Get in it. You'll be addicted. You'll learn how to invest. You'll find the best locations. You'll learn how to make trade-offs, all for just a simple, cost-effective price point, right? I have made property education incredibly affordable, guys. So make sure you jump in, get the help you need, and then get the hell out and then live your life, right? It's not hard. It just needs a little bit of guidance. Let's get back into the video. It's all well and good to know about which locations to consider within the Newcastle region, but for those of you who don't know the Newcastle area like I do, or are from our different states, Newcastle has a population of around 176,000 people. So a huge regional location. And you've also got the Maitland region, which is about 100,000 people. And if you're wondering why I'm showing you Newcastle and Maitland, it's because they're right next to each other, right? It's literally a 30-40 minute drive away from Newcastle, super close. So when I look at the economy and I look at the population, I'm trying to look at the combined, because being 30 minutes away from a large regional hub isn't big at all. And so when you look at Newcastle's economy, you can see it's mainly tied to manufacturing as well as financial services and a little bit of mining as well in there. But you don't often see that financial insurance services as one of the biggest sectors in a regional hub. But nonetheless, Newcastle has that in terms of its exports. And when you look at the employment, or what's the biggest employer in the region, it's mainly healthcare, education training, and construction as well. And now that's well and good. But I do also want to call out, when you do look at the Maitland region, in terms of its regional export, you actually have mining as its largest exporter with about $2.1 billion, taking about 30% of the sector. Now, which is quite a large portion. I usually often say that if it's more than 25%, we need to be concerned. Now, the reason I'm not as concerned as I normally would be is that despite Maitland being partly driven by mining, you do have it directly 30-40 minutes away from the Newcastle CBD, where there is still many employment opportunities. And to be 30 minutes away, it's not that difficult. So if something did happen to the mining sector, we have the jobs in the Newcastle region to supply the people with incomes. So it's a lot more safer from that aspect, from a small regional location that is tied to mining only. And hence, I do want to call out, yes, it is tied partially to mining, but it's also next to one of the largest regional hubs, which has diverse employment opportunities into healthcare, education, training, and more. And the fact that Maitland has affordable property prices compared to Newcastle, but only 40 minutes away. But of course, like always, do your own due diligence, make sure it still fits your risk appetite and your category. But for me personally, the way I view it, and in my opinion, the risk is a lot lower compared to a small regional mining town. Now, that's in terms of its economy, what's happening in there in terms of local employment. What I also did want to show you is the population forecast, especially for Newcastle and the region around it, right? Newcastle is an actively growing location in terms of its population. And by 2041, we're going to have around 200,000 people compared to 170 odd thousand people. So a large change, and we're always going to need homes for these people. And you can't keep building out into Newcastle. You're going to have to go further out into this region around Maitland, around Kurri, around Cessnock, etc. So there is a good future for this region to become bigger and stronger and more economically diverse. So it's looking positive from that side as well. And so the next thing I want to show you is an example of a property. Now this property here, 29 Michael Hill Avenue, Woodbury, is a very nice brick home, very good interior, and something like this is being rented out for $620 per week. Now if you're wondering why I'm showing you the rented one first, is because I found that this property was sold off market, and it was sold for around $720,000 back in July of 2025, which when I release this video should be about 3 months back. And so when you put this into your calculator or the property portfolio summary sheet, you can see that this will cost you around $178,000 on a 20% deposit, and on a 12% deposit, you're still going to need about $130,000 in cash or equity. So definitely not cheap, but it's still possible. And with $620 in rent, you're about 4.5% in terms of your rental yield. So nothing amazing, but for this price point at $720,000, that's a pretty good yield in my opinion. And what that does look like in terms of net cash flow is that you're about $18,000 per year before tax considerations, so around $1,500 per month. So you really have to make sure that if you do buy properties like this with this sort of rental yield, then you can stomach the negative cash flow, at least for the time being, until you have rental increases. Now, everything can't always be sunshine and rainbows. You do also have to talk about the negatives of a location. And with Maitland, one of the biggest negatives is that large parts of it does flood. There has been flooding before in Maitland. I believe the most recent was in 2022. And you can see some of the drone footage of how bad the flooding can get. So it is a serious consideration when you are investing into this location. You can cross-reference information with other flood mapping documents online, and be really careful about which locations you are buying into and which pockets to make sure they don't flood or they haven't had a history of flooding in the past. Because the last thing we want is to have a flood-ridden property that insurance doesn't want to pay out for. Please also double check your bushfire zones to make sure you aren't buying in a bushfire pocket as well. And always, always, always double check your insurance premiums when purchasing into a location like this to ensure that they are acceptable levels. Now, the other one I wanted to talk about is housing pockets. Now, there are some housing pockets throughout some of the locations I suggested, like Rutherford, that you do want to be staying away from. So please go check on OpenStats and then confirm with the local property manager. So if you do see a location that is on the sort of red side of this tool, then you want to be a bit more wary about it. Even in the parts of Woodbury, you can see that parts of it are in a deeper sort of public housing zone, which you want to be avoiding, generally speaking. So overall, there's a lot of potential with Maitland and the locations around it. It is a pretty good regional location to consider. It's only 30-40 minutes away from Newcastle, which is a growing regional hub with over 170,000 odd people. Maitland's another 100,000 people, or close to 100,000 people. It definitely has opportunity. It's definitely already picks up some steam. So if you do want to consider it, it's probably better now than later. Of course, you need a budget of around 650 to 750, and you can expect yields of around 4 to 4.5%. That's the expectation and the mindset you need to have. And if you have any questions at all, jump into the private community and we will help you out. Till next time, thank you very much.